Welcome to XFO Intelligence, where we decode the future of global economics through deep research and strategic analysis. Today, we're diving into something extraordinary, the global economic outlook for 2026 and what we're calling the multi-corridor economy. This isn't your typical economic forecast. This is based on deep augmented thinking analysis of credible sources, and what we've uncovered reveals a fundamental transformation in how the global economy operates. Let me start with the headline. The world economy in 2026 is entering a phase of asymmetric but robust expansion. We're projecting global GDP growth at 2.9%. But here's what's fascinating. This growth is distributed across four distinct economic corridors, each with its own dynamics and characteristics. Think about this. We've moved beyond the old US-China bipolarity. Instead, we now have four interconnected growth zones, creating unprecedented resilience. First, there's the U.S. Innovation Corridor, growing at 3.1%, driven by technology leadership and flexible labor markets. This includes the United States, Canada, Israel, and South Korea. Second, the China-ASEAN manufacturing network, expanding at an impressive 4.6%, focused on export-oriented production and supply chain diversification across China, Vietnam, Mexico, and Turkey. Third, the European industrial cluster, growing more moderately at 1.4%, but leading in high-value manufacturing and the green transition across Germany and Northern Europe. And fourth, what we call the resource technology bridge, growing at 3.8%, combining commodity innovation with digital infrastructure build-out in markets like Australia, Chile, UAE, and Poland. Now, why does this matter? Because this multi-corridor structure creates something we haven't seen before: unprecedented resilience against regional shocks. No single economic zone dominates global flows anymore. This reduces systemic vulnerability while maintaining strong growth momentum. But here's the really exciting news for investors and policymakers. Inflation is converging. We're projecting core inflation to hit 2.1% across major economies by the fourth quarter of 2026. This convergence is being driven by moderating wage growth as productivity gains offset labor scarcity, fading tariff impacts, and stabilizing shelter and services costs. Now, what does this mean? Synchronized monetary easing. Major central banks will complete their hiking cycles by the first quarter of 2026 and begin coordinated easing, with terminal rates 50 to 75 basis points below cycle peaks. For financial markets, this creates compelling opportunities. We're looking at continued bull market conditions with 8 to 10% annual returns in equities. But, and this is crucial, leadership is shifting from pure growth stocks to what we call resilient growth companies, those with multi-corridor exposure. Now let's talk about the elephant in the room: artificial intelligence and automation. Our analysis shows AI is driving record productivity gains of 2.1% annually. Sounds great, right? But here's the paradox we've identified. While productivity is surging, net job creation is only growing at 0.7% annually, and the skills mismatch gap is widening by 0.5% each year. This productivity labor paradox represents the economy's most significant vulnerability. Without aggressive reskilling and labor mobility programs, these social pressures could trigger policy reversals, despite strong aggregate growth. Let me share something fascinating about how geopolitics and economics are realigning. Trade and investment flows are increasingly following economic logic rather than political alignment. We're seeing supply chains reroute around geopolitical barriers within just 6 to 9 months of disruption. Companies that maintain presence in 3 or more growth corridors are achieving 25% higher operational resilience during geopolitical stress periods. Think about that strategic implication. Diversification across corridors isn't just good practice anymore. It's essential for survival and growth. Climate adaptation is also becoming integrated into core economic infrastructure, not just an ESG consideration. We're looking at $1.2 trillion in annual investment required in climate-resilient infrastructure through 2030. Water security and extreme weather protection are becoming primary factors in manufacturing location decisions. Now let's talk scenarios. Our baseline scenario, which we assign a 70% probability, projects that 2.9% growth sustained through 2026, with the four-corridor system operating at optimal capacity. In this scenario, we're looking at global equities returning 9.5%, bonds 5.2%, and commodities 4.8%. Here's our stress scenario with 20% probability. A geopolitical recalibration triggered by simultaneous disruption in two major corridors. This would cause a 6-month growth pause and temporary inflation spike to 3 to 3.5%. However, the system would reconfigure within 8 months through rapid capital reallocation and activation of backup supply chain pathways. There's also a breakout scenario, 10% probability, where a breakthrough in human-AI collaboration resolves the labor displacement paradox, accelerating global growth to 3.4 to 3.6%, with Africa and South America emerging as the fifth and sixth economic corridors. So what's the optimal investment strategy for 2026? Our framework suggests 35% allocation to multi-corridor equities, 25% to productivity infrastructure like AI and energy transition, 20% to emerging corridor leaders, 15% to quality fixed income, and 5% to strategic liquidity for opportunistic deployment. The critical selection criteria look for operational diversification across at least 3 corridors, adaptive capacity to reconfigure operations within 90 days, and resilience investments exceeding 15% of capital expenditures. For corporate leaders listening, here are your strategic imperatives. Build a multi-hub footprint across at least 3 corridors. Develop workforce fluidity with skills passport systems. Build 20 to 30% redundancy in critical supply chain inputs. And establish dedicated teams monitoring corridor-specific regulatory evolution. Here's our key risk monitoring framework. We're watching 4 critical early warning indicators: the labor transformation gap, single corridor concentration, policy synchronization scores, and climate vulnerability exposure. Each has specific thresholds that trigger action requirements. Here's our bottom line. The 2026 global economy represents a fundamental evolution. We're moving from an efficiency-driven system to one where value emerges from connectivity, flexibility, and resilience. This is the adaptive economy. Success in 2026 belongs to those who predict single outcomes, but those who build adaptive capacity across multiple potential futures. The most valuable economic entities will balance efficiency with resilience, growth with stability, and competition with ecosystem health. The greatest risk isn't economic slowdown, it's rigidity in the face of accelerating transformation. Organizations that embrace continuous adaptation while maintaining core purpose will thrive in this multi-corridor economy. If you found this analysis valuable, please like, share, and subscribe to the XFO Intelligence podcast channel. We bring you deep research and strategic insights that help you navigate the complex global economy with confidence. Disclaimer: this outlook represents analysis based on comprehensive economic research and scenario planning as of the recording date. All economic projections, growth estimates, and market forecasts are subject to revision based on evolving geopolitical conditions, policy responses, technological breakthroughs, and unforeseen events. This content is for informational and educational purposes only and should not be construed as financial, investment, or professional advice. Listeners should conduct their own due diligence and consult with qualified financial advisors before making any investment decisions. Past performance and projected scenarios do not guarantee future results. XFO Intelligence assumes no liability for decisions made based on this analysis. Thank you for listening to XFO Intelligence. Stay informed, stay strategic, and we'll see you in the next episode.